Okay, so I wanted this to be an instructive, should I call it a lesson, on price action. And this is the Nasdaq futures from Vantage, and it's very similar to NQ. They're basically the same thing, but one of them is a CFD. So I will be using the CFD to illustrate price. You know what? Why not just use the futures contract and use NQ? So firstly, we are in a new month, 1st of November, and a very good practice every new month or every new week or every single time a new higher time frame candle is starting, a good practice is to zoom out and remove yourself from the noise in the lower time frames. If I go to the 5-minute chart right now, it's a mess, right? We have all this up, down, up, down. Once you zoom out, everything becomes like magic. It just becomes clear, and you can see, okay, what is price doing? And that is exactly what I will be, going over in this video. We'll be covering just one very specific thing, which is the ICT, IPDA, the 4 cycles that price goes through. And you want to apply that to the formation of the chart and use those concepts to build a bias and find our key levels. Now, obviously, you might be looking and be like, oh, there's a volume gap, there's a new week opening gap, new day gap, fair value gap, whatever. Slow down and, approach it with logic. Now, we're starting a new month. I usually like to go to the 3-month chart. And I go there and I see, okay, what is going on here? If I look at this, if you wake me up from sleep and I look at this, this is a bullish chart, right? It's very bullish, very, very bullish. We had a manipulation, which is defined as expansion without follow through, where we expand lower and we reverse. That is 2 IPDA functions, right? From a consolidation to an expansion, and then the reversal is confirmed with what? A candle closure. So in that case, we have a reversal function here that has been confirmed with accumulation, manipulation, distribution, consolidation, expansion, reversal. Same thing. You can call it whichever feels more familiar to you. Now, you saw this candle closing above the previous month. We are in this month right now. That's October's month, right? Sorry, that's not October's month. That's the previous quarter. So this candle right here, it's a 3-month chart. This candle is going to span from October to December, right? And right now it's bullish, right? But it still has 2 months in it. So it's very unlikely that this will be the closing nature of this candle. Now, we closed above this candle, this one right here, which was the first quarter of the year, right? You can see January 2025. And we came right there and we retested it. That's an immediate rebalance on the 3-month chart, which is further signifying bullishness. Now, in this case, we want to go into the new month, looking at the new month and looking at the new month candle and being like, okay, where is the low of the new month likely to form if we are bullish? Because I am bullish based on the higher time frame order flow. I am bullish. It's bullish order flow breaking above consecutive highs, right? Now, that's enough for the 3-month chart. There isn't much to go off of here. We have the current opening of the current quarter, but this candle is incomplete, so we cannot judge this candle based on its current state. We drop down to the monthly chart, and then we have a clearer idea of, the inner mechanics of those quarterly candles, right? So we had this reversal confirmation, right? And we're expanding higher. Now, we had the past 3 months. I'm going to take this off real quick. This candle to this candle, those are the candles of the previous quarter. This is a new quarterly candle, right? But since we're going into a new month, well, we want to analyze what the past, 2 months did. So we're going to look at a 40-day look back, which is 2 months behind. And we're going to look at a 20-day look back, which is 1 month behind. Now, on the monthly chart, you can see that we have formed a lower wick on October. This wick right here is the wick of a monthly candle. If we were going to be talking about a 20-day look back, not a 60, not a 40, for a 20-day look back, that would be the previous monthly candle on a futures chart, because 5 days in a week, 5 trading days, 4 weeks, 5 times 4, 20. This is not a math class. So we traded down lower, opened into what? Salient wick. That is the wick of a previous month, right? We closed above, retested it. That is a rebalance on the monthly chart. So this is a salient level. This right here is a salient level. Why? Because if I'm bullish, I want to anticipate this low to stay, untouched, to stay where it is, to not see price trade all the way back down here. I want to see price stay above this low. And, with alignment with that 20-day look back and IPDA, we want to now look inside of this monthly candle, right? We've looked at the year. We've seen that we've had a yearly expansion and a yearly reversal, and we are now bullish from how we were bearish in the beginning of the year. Looking at this candle now, we want to go down into even a lower time frame, which would be the daily chart, to look and see the behavior of this candle based on, again, the topic, the IPDA, which is consolidation, expansion, reversal, retracement, and then the cycle repeats itself again and again and again. So down to the daily chart. Now on the daily chart, you can see we have these levels. Now, like I said, 20-day look back. This is something that ICT has talked about very recently, but that is not the first time he has talked about it. He has talked about this multiple times before, in the 2016 mentorship, in the 2022 mentorship, in the 2024 mentorship. It's a very important concept because basically it's just you reading past higher time frame candle order flow. Now, based on that look back, the thing that stands out the most is this big red candle here, which is supposedly a Trump tweet, right? It was a Trump tweet. And you can see very quickly we countered that move and, we traded a bit into the gap and countered that move, I would say, quite quickly. Now, what would you call this based on IPDA? I would call it an expansion. Before this expansion, we had a consolidation, closely knitted price, building up anticipation, new all-time highs, right? And then, boom, liquidated. 1, 2, 3, everybody's gone, right? And then we start to go higher. So we have consolidation, expansion, and then the reversal is confirmed with a closure above the body of the candle that ran an old low. You see how we build definitions, and we are very mechanical with our definitions of concepts. You don't just run around calling things order blocks. It's this, and it does not become an order block until we close above it. Then it becomes an order block. Of course, you can anticipate it with lower time frame price action, with a fractal IPDA sequence. It's always fractal. It's always a sequence. We have an order block that is formed. So plus OB. Now, we have this 20-day look back range. We have this order block. We have this gap. We have this fair value gap. We have this fair value gap. We have this old high. How do we know what to focus on? Well, a new month is opening. If we are bullish, we want to see price open lower and then expand. The question now is, where exactly is that lower? Where do we want to see price open into before we expand higher? Well, we can frame it in a couple ways. Of course, we don't know exactly where the low of the next month is going to form, but if we split that 20-day look back, which would be the previous month's range in an expansion, and we take our quadrants and just draw those quadrants, you can see right here, we have the high, the low, we have the midpoint. Now, when you have an expansion away from a, opposing run, and you form an order block, usually if it's a lower time frame, you take that midpoint and you call it discount, premium, you wait for a discount, and then you expand it to premium. On the higher time frame, it's not always so. You don't always have a deep retracement into discount before you expand higher again. But in this case, we have not only an order block here, we have a proportion block that is reaching into this order block and expanding again. And that is the last order block before price, starts to consolidate up here. And it has never reached us to this order block. Now, that is a very key level. Why? Because it lies around equilibrium. This is the most salient level, if you were to ask me, for price to reach into and potentially continue from on the monthly time frame. Now, looking at this gap, well, the gap really isn't inside of discount. It's inside of premium, right? So if we were to continue from this gap, well, there's a lot of things and a lot of ways the price could go about things, right? Sometimes it could trade higher to put a key level in discount and then run into it before we continue higher. So we're going to frame it on an if-then basis. So we can look at it in a way that if price fails to trade back above these highs formed by this daily candle's high and this daily candle's high, meaning if price stays under these levels and we trade down into this level, I'm not really looking to see a meaningful reversal from here. It's possible we could get it, right? But it's likely that we will stall because we had this large candle and a large reaction from this gap right here, this one right here, and we were reacting from it, traded above, and now we have an inside bar. In my experience with inside bars, usually they're very key in the formation of new candles, and price will more often than not run out the high or the low of an inside bar in a particular program. So in this case, in a sell program, which would be the sell side curve of an expected bullish candle, basically this part of the bullish candle to the left of it, right? To the left of it, which would be the sell side program before we have the buy side of the curve. Usually the sell side of the curve will take out inside bars, and it would basically do this and then return. So I'm not making this video to try to predict what the next candle is going to do. What my focus will be, though, would be to focus on this inside bar and the high of this inside bar. Focus on the low of this inside bar. And I'll focus on the gap. And I'll look at this order block, which is the most salient level. Why? Because it's the order block that price left near or at equilibrium, which is in this case at equilibrium, right? It's a proportion block off of this level right here. So it's a very salient level, and price could very much reach into it. If it's not reaching into it, like I said, this inside bar could be a very key place where price could either run the low and then run the high, probably, and then run lower again, and then inverse this gap running into this level, and then we would reverse and expand. Now that's just one scenario, right? Obviously geopolitical events could take things for a turn, and like I said, anything can happen. I'm not trying to predict the next monthly candle. That's too big of a time frame for me to want to predict. I don't even want to predict it. So I'm going to be focusing on these levels, this inside bar, looking to see an IPDA sequence at these levels. If we get manipulation at this level, meaning we expand into that level, and then we form a reversal at that level, I will be looking to see price trade into this gap. And that would be my immediate short-term draw. And then I would watch price to see price's reaction at this gap. If I see that price is forming a reversal at the gap, well, that would be a sign that we could probably continue and expand the previous expansion, continue that expansion to the upside. If price, fails to form that kind of reversal at this gap, which would be the immediate draw, like I said, I'm watching this inside bar. If we manipulate this high, this would be the immediate draw, right? If we manipulate the low and we're trading higher, this would be the draw. And then not this high. This high would be the draw because that's the inside bar. And then we would want to watch that inside bar to see if price would want to form another local top at that level, leaving this high untouched as equal highs, trading down lower into the gap. Again, in which case the gap is still the draw. So we have these salient levels that are around each other that you can use to frame price and basically link them to IPDA functions to observe where price would likely be heading next. Now, if you notice, I have segmented my PD arrays, and you can see that, they are in specific levels of these quadrants. Same things that ICT has talked about. We have the upper quadrant, the highest point of it, the uppest quadrant, the lowest quadrant, which we are not expecting price to get into, close to, right? The lowest point I want to see price, if we are going to be expanding higher, is the low of this bullish candle right here that forms this gap, which is this low right here. That would be the lowest point as to which price would get to that would invalidate my bullish idea. If price gets to this level, I will not be seeking to see price trade higher anymore. But for as long as price stays above this level, there's a chance that it could still go much higher, right? So again, the salient levels in the uppest quadrant, the gap just below the 0.25 level, between the 0.25 and the midpoint, which is another salient level inside of another quadrant. And then we have this proportion block, which is also inside of that quadrant, which extends obviously into the second. I don't know what to call them. I'm just going to call them 1, 2, 3, 4. We don't want to see price get into 4. It's okay for price to get into 3. It's okay for price to get into 2. Obviously, price is in 1 right now. So again, the inside bar. We want to look at these inside bar, the levels, and we want to pair those levels with IPDA functions, obviously with cross pair analysis, looking at the ES and the Dow to see how they react to their respective gaps and their respective levels. And then we can form, a logical bias based on price and based on the reaction of price, not just some assumption and erratic, mindless drawing of PD arrays on just any time frame. I don't need to go to the 4-hour chart yet. I'm looking at a scenario and a case study for the entirety of the next month. So this isn't just, a daily bias or session bias. It's a monthly bias. Now, this is how I break down price. And it's something that I do personally to learn to be able to just voice my thoughts and get it out there. Not really to prove that I know how to do anything, but how else am I going to practice, right? I've been doing this for since the beginning of the year now. I haven't been making the videos, but I've been practicing. And I do these videos to get it out, to practice, voice what I am thinking about the markets, and to be able to articulate it in a way that helps even me understand it better, because it's very easy to get lost in your own thoughts. So that's going to be it for the video. And I will see you next time. So here.